Here's where the most ominous warning of all comes from, the one that actually scares me. The Labor Department said that its producer price index, which measures inflation at the wholesale level before it reaches consumers, climbed 11% in April from the previous year. That inflation on the wholesale level, Dave, has to work its way back to the consumer.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Dino. Welcome to the Gold Standard, your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals, such as gold, silver, and platinum to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group. His peers characterize him as a straight shooter who will work harder for you than anyone else. Ken, it is such a pleasure to join you again this week.
It's always a pleasure to talk to you, Dave.
In several past programs, we've looked at warnings about the U.S. economy, but those warnings are becoming more frequent and more ominous. So today, we're going to catch up to the news of the day, and we're going to look at some of the latest warnings from financial advisors from several sectors of the economy. Let's begin with the fact that the stock market Dow Jones Index fell more than 1,000 points in just one day. I mean, when I saw that, I felt shock.
Well, yeah. Well, it's just the beginning, though, Dave. The overvalued stock market bubble is bursting. The bubble caused by unlimited money printing and stimulus. There are now more sellers than there are buyers, Dave, and we've seen a big change in the markets over the last 6 months. But the writing was on the wall.
I think investors can be fooled. We get a day when the market drops by 1,000 points, and then we get other days that have, 300, 400, 500 point drops. But then we get another day where it bounces back 400 or 500 points. And so we get the idea, okay, the market has hit bottom. Now it's on the recovery mode. It's easy to get fooled, isn't it?
Yeah, but how many times have we talked about the massive abuse of political and central bank power over the last 20 years and the biggest bubble in history? And how could that be bottomed in just a few months? This takes time.
Mm-hmm.
This is going to take years, but that's normal, and that's greed and that's emotion. And that's the market that we're kind of in. So we just have to kind of play it by ear and be patient and keep the powder dry and wait on the sidelines if it comes to stocks until, we're severely undervalued, and we're not anywhere near close to that.
There's a recent headline that I read that said Goldman and the rest of Wall Street are souring on the S&P 500, which, by the way, dropped more than 500 points the same day the Dow dropped more than 1,000. Ken, what are they telling us?
Well, they're the herd, Dave. They all pile on at the same time and reach abnormally high levels, and then they all try to leave at the same time out of the same barn door, so to speak. Wall Street is reluctantly coming to grips, Dave, with a new reality for 2022, that this isn't going to be a good year for stocks. Here are some of the signs. Credit Suisse cut its forecast for the S&P 500 index. Goldman Sachs Group, Bank of America, Morgan Stanley are all now predicting that the equities will struggle this year. Federal Reserve is in the midst of an aggressive rate hike cycle, which everybody knows it's expected to weigh on U.S. corporate earnings and economic growth. As earnings go down, Dave, price to earning multiples in stocks go down. This could chip away at key supports for the stock market, after how many years of easy monetary policy helped fuel over 100% increase in the S&P 500 from March of 2020. So I don't know if people realize how far we've come and how quickly, but when this pandemic hit 2020, the move was just parabolic based on exponential money printing and debt and stimulus. But the truth of the matter, Dave, is that the Fed now deflates what it inflated back then. Let me repeat that. The Fed is now deflating what it inflated back then.
I know, Ken, that this all might sound like financial mumbo jumbo to the person that's not really into finances each and every day. But the bottom line is that we all need to be aware of the bottom line that affects our savings, our investments, and our retirement accounts. Even if the U.S. manages to avoid dipping into a recession, stocks look risky. That, according to many strategists. And we have a vivid memory of the crash of 2008 and 2009, where many people lost 50% or more of their investments. People who counted on their investments for retirement had to postpone their retirement, and those already retired, many of them had to go back to work. Ken, how did gold perform when the market wiped out so much of what people had saved for retirement?
Well, that's a great question, Dave, and that's exactly what people should be paying attention to in this market. In the 1970s, there was inflation, and gold went up by 25 times. I know that the audience is well aware that the dollar went off the gold standard in 1971. There was inflation that was supposed to be done temporarily, and in the 70s, gold went up 25 times to fight that and fight inflation. From 1999 to 2012, gold went up by 9 times to save investors, Dave, from the dot-com crash and 2008 subprime mortgage crisis. Now, gold, Dave, is poised to protect investors from the upcoming financial debt crisis, which is front and center.
I have to tell you, that's really encouraging. When we talk about gold and precious metals, and we compare that to what is going on in the economy, to hear that gold holds its own is very encouraging.
That's what it does, Dave. I mean, that's what it's done for 3,000 years. It holds your purchasing power. It's money. It's a medium of exchange, and it offers diversification. And how many times have we talked about, in the joyride, everything's working great. Make sure you lock in a portion of those profits and, protect it and preserve your wealth. And isn't this show and what we talk about every week, preserving your wealth through the ownership of physical precious metals like gold, silver, and platinum? So it's a little boring. It's not as exciting as a skyrocketing stock or a soaring crypto or a exciting new biotech. No, it's just slow, steady. It always has value. It'll always be there for you. And in this particular market with these particular risks, it's more important to own gold than ever.
A reminder here that you're listening to The Gold Standard with Ken Russo from Midas Gold Group, and today our topic is ominous warnings. Okay, here's another warning headline. Inflation gave most Americans a 2.6 wage cut in April. In other words, inflation is outpacing wage increases, and we're actually losing money, right?
Yeah, still losing money, Dave. Unfortunately, you're correct. This article stated the tightest labor market in decades is fueling rapid wage growth for millions of Americans, but sky-high inflation is quickly eroding those gains. By that measure, the typical U.S. worker, Dave, is actually worse off today than they were a year ago. Even though nominal wages are rising at the fastest pace in history and in years. That's because consumers are confronting the highest inflation in a generation, Dave, which has quickly diminished their purchasing power. The rapid growth of inflation, still the highest literally in 40 years, means that Americans are paying more for everyday necessities with price increases broad-based in April. This includes the rise in prices of, let's say, dairy, meats, poultry, fish, chicken, obviously, and fuel. Everyday shelf items like cereal, bread are in the same upward price spiral, Dave. And we've mentioned this rate may slow a little bit or it may level off, but prices are never going back down to where they started ever again.
So, Ken, what does that mean for money we're not using for living expenses? Money we've already put away in some kind of an investment?
Well, it continues to buy less. It continues to be worth less, our paper money each year.
Mm-hmm.
Fiat money throughout history, Dave, how many times have we talked about this? It's always failed. Governments that have bet on money printing and debt and stimulus, fiat currency of that country has always failed. And I don't see why, our currency right now would be any different. That's the hidden cost, Dave, of record inflation, that we're seeing, because because of inflation, your investments will dwindle. Your paper investments will dwindle in value as long as they're tied to the dollar and to the health of Wall Street.
Ken, I know that you believe strongly in the strength of gold because it traditionally, as you've already indicated, holds its value when other financial vehicles lose value. So, in light of these ominous warnings, what are you seeing as to the percentage of savings that people are moving over into physical gold?
Well, we've talked many times. It's a little different for everybody. Everybody has a unique situation. People used to talk about a 10% gold allocation in the past to be in a diversified portfolio. But my contention is that because things are so dangerous and risky, and because we've seen so much money printing and stimulus and just fakeness over the last 20, 30 years, I think more protection, more defense is in order than ever. I would ask people to consider up to 25% of their paper assets right now to be diversified, moved over into physical gold because things are that scary and that risky, Dave.
Wow. You're listening to The Gold Standard with Ken Russo from Midas Gold Group, and today our topic is ominous warnings, and we've already had a few of those. In a moment, we're going to look at a specific precious metal that you can use to safeguard your wealth, and that's coming up right after this.
The gross domestic product, the GDP, declined in the first quarter of this year at a 1.4% annualized pace, marking an abrupt reversal for the economy. Many financial experts believe that 2 straight quarterly declines mean recession, which is why I diversify my investments with physical gold from Midas Gold Group. Gold traditionally holds its value when the dollar falls and economies fail. Sebastian Gorka here. I know from experience that many factors can unexpectedly cause sudden market downturns that can rob you of your retirement security. I recommend calling Midas Gold Group to talk about safeguarding your wealth with physical gold. Don't wait until inflation devalues your savings. Diversify your investments today with physical gold and precious metals with the only gold company I recommend, Midas Gold Group. Log on midasgoldgroup.com, then call them at 855-322-GOLD. 855-322-GOLD. It's gold you can hold.
And we're back with more of The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino, and our topic today is ominous warnings. By the way, if you live in the Los Angeles or Phoenix area, we encourage you to visit our local office to meet with us in person. For the address and directions, just log on to our website, midasgoldgroup.com. MIDAS, midasgoldgroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD. 855-322-GOLD. By the numbers 855-322-4653. Ken, we turn now to look at a specific gold product, and I want to look at a gold coin that we talked about just a few weeks ago because you were so very enthusiastic about its value right now. The gold Britannia. Why are you recommending this gold coin right now?
Well, first and foremost, we're recommending gold, physical gold. That's the only way to own it is, if you don't hold it, you don't own it. And there's different products. It could be bars or coins that we look at all the time and we see which ones are available and which one are conservatively priced, maybe compared to its peers. And I would say the gold Britannia, Dave, is one of those coins that meets that criteria. Nice coin, great fineness, great purity, great value. And when it comes to investing, you need to own things that are on sale and have value. And the gold Britannia would meet that criteria.
What do we need to know about the gold Britannia?
Well, just some basic data, Dave. It's the flagship coin of the British bullion coin market. It's minted in 24 karat gold coin, 0.9999 fine gold. That's considered pure gold. It was first introduced by the British Royal Mint in 1987 and was Europe's first gold bullion investment coin. So to set the stage, Dave, for other gold coins that came after that.
And it's been minted, I understand, in a number of different designs.
Yeah, and that makes it a little bit more interesting, Dave. The obverse or the head side features a portrait of Queen Elizabeth II and a face value of 100 pounds, but it's worth much more than that, of course, as its worth is based on weight and purity. And the reverse side has the figure of Britannia, a symbol of Britain's strength on coinage since actually the Roman times, Dave. It has a sunburst design behind Britannia that actually adds anti-counterfeiting protection to it. But here's where the variety comes in. The last few years have seen many changes to the design of the Britannia series itself. The most important design change was the 2016 introduction, Dave, of the fifth official portrait of the Queen. No British monarch has ever received such an honor. The 2020 edition of the Gold Britannia on its reverse side features the familiar portrayal of the goddess Britannia, the grand lady warrior of resilience and strength. It's a picture of Britannia ruling the waves, Dave. Her robe billows in the strong sea winds as she stands upright against the wind, firmly holding a trident spear, actually, while carrying in the other hand a shield and an olive branch. So it's a great coin, Dave. The sheen of the gold on this particular coin is a little shinier than some of the other coins. It makes it very unique and highly recommended coin and a highly available coin at this particular moment.
And you have these available right now?
Yeah, we do. And they're IRA. They qualify for an IRA. If you have some liquid reserves or some cash reserves, you could just convert those into these coins and take possession of them physically. And like I said, the price of the Britannia is less than the Maple Leaf, the Eagle, and the Buffalo. So we think it has tremendous value. I would encourage investors out there looking to diversify from this horrific, stock and bond market into the gold Britannia.
Thank you, Ken. Coming up in a moment, we're going to continue talking about ominous warnings with Ken Russo from Midas Gold Group. That's coming up right after this.
Consumer prices surged 8.5% in March. Wholesale inflation surged 11.4%. Sebastian Gorka here. The markets recently reacted to runaway inflation and drastic measures by the Fed by dropping up to 1,000 points in a day, which is why I recommend diversifying with physical gold from the only company I trust, Midas Gold Group. Call Midas Gold Group at 855-322-GOLD. That's 855-322-GOLD. It's gold you can hold.
And we're back with more of the Gold Standard brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino. Our topic today is ominous warnings. By the way, if you live in the Los Angeles or Phoenix area, you're actually very close to one of our physical offices, so we encourage you to come and visit us at our local office and meet with us in person. For the address and directions, just log on to our website, MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. And for those of you listening in other cities or even around the world, call us directly at 855-322-GOLD, 855-322-GOLD, by the numbers 855-322-4653. Now, let's return to our topic today, ominous warnings. Ken, I have one last headline for you to comment on. Billionaire bond fund manager warns of real recession in 2023. What's behind this ominous warning?
Well, it comes from a very successful person, referred to as the Bond King. So this is not just somebody who's new to the game. He pointed to home prices, Dave, noting that affordability has decreased very much so in the past 2 years. But here's where the most ominous warning of all comes from, the one that actually scares me. The Labor Department said that its producer price index, which measures inflation at the wholesale level before it reaches consumers, climbed 11% in April from the previous year. That inflation on the wholesale level, Dave, has to work its way back to the consumer, or companies will lose money. So companies are just passing these higher prices along. So again, your money will be worth even less, both the money you earn and spend for living expenses and the money you invested for a secure retirement account that you invested in paper. So we've seen Wall Street decline by more than 6,000 points. We can possibly see a recession. We can possibly see something worse. We're definitely going to see inflation, high inflation. I would recommend buy gold, diversify, protect a little portion of what you have left.
A reminder here that you're listening to the Gold Standard with Ken Russo from Midas Gold Group, and today our topic is ominous warnings. Ken, how does gold, physical gold, then give you a hedge against losing money?
Well, it always has value, Dave. It's a medium of exchange. It rises when the dollar falls. That's typically the relationship.
Hmm.
As the dollar falls, gold rises.
Then the question I have is it too late to move investment funds or cash over into gold now?
Absolutely not, Dave. Gold today is as undervalued as it was back in the 1970s at $40 an ounce, literally. The amount of money, Dave, that's been printed in the last 50 years and the amount of debt that's out there and that's outstanding is enormous. Gold is still as undervalued today at a little under $1,900 an ounce as what it was back at $40 an ounce in the early 70s, if we consider all the money that's been printed and all the debt that's been out there. When it comes to dollar denominated assets like annuities, mutual funds, ETFs, stocks, it's all paper. It's all valued in the dollar, so that's not diversification. And you need a hard, tangible asset to diversify to prepare for the upcoming financial crisis. And I don't think any of those products that are valued in paper dollars are going to hold up, especially with inflation, debt crisis, and everything else coming along the way. So I would be very careful, Dave.
I think the telling thing that you said that really jumped out at me is this, that they're all tied to the dollar. And even if your principal is guaranteed, if you're not going to lose principal, if the dollar is losing value, then what you're guaranteed is actually losing value. And that is very different than owning physical gold, isn't it?
Yeah, it is. I mean, I just read something the other day. I think whatever cost $100 back in the 70s now costs $800
Wow.
today. So, I mean, that's what you're faced with. I mean, so if you had $100,000 in cash, let's say 20 years ago, and you had to make a decision, do I leave that $100,000 in cash or do I put it in real money, which is gold? You would see a significant difference in the performance of that money. So whatever the markets do, whatever your annuity, turns into, whatever your life insurance policy turns into, it's still priced in dollars. So that has to be, considered, when it does come time 20, 30 years down the road. So you need something that's going to keep your purchasing power, something that can't be printed out of thin air, debased forever, devalued into the ground. I mean, I don't know if people realize, Dave, we've talked about it many times. The dollar has lost 98% of its value against gold since the 70s. So you have one investment like paper that loses value, always buys less in the future, and then you have another investment like gold, which is real money, hold your purchasing power. An ounce of gold could have bought a man a nice suit back in 1930, and an ounce of gold can still today buy a man a nice suit in 2022.
I got to tell you, it's guidance like that as to why I own gold, physical gold from Midas Gold Group. Ken, thank you so much.
It's always a pleasure, Dave. Nice to talk to you.
That's going to bring us to the end of our time together today here on the Gold Standard with Ken Russo, brought to you by Midas Gold Group. And a reminder, opinions given here are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD, 855-322-GOLD. By the numbers, that's 855-322-4653. And the website is MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. The Midas Gold Group is proud to be America's #1 veteran-owned gold dealer, supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future is also an investment in the future of those who have bravely served the cause of freedom. We're in this together. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD. Here it is one last time, 855-322-GOLD. Ken, thank you again for your time today.
Thanks for your time, Dave. God bless America.
Indeed. I'm Dave Dino. Join us again next week at this same time for another edition of the Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.